Hi, everyone. I'm Rick Zanotti, and this is eBizChat, where it's all about business. I am joined today by my good friend and co-host. It's Dr. Susan Nash. Susan, how are you today?
Oh, I'm just really happy to be here, and I'm super excited about our guest today. I'm not sure if anybody knows about Bitcoin mining, and this is an opportunity to find out how Bitcoin is being generated and cleaning up the environment at the same time. So our guest is
That'll
Jonathan
be pretty
Kohn.
good. So here we go.
Yeah.
This show is sponsored by Talking Vids, corporate video, e-learning, enterprise-wide development, online interviews, multimedia development, and more. Visit us at www.talkingvids.com. And we are back in what we call our center position of power. Who do we have with us today?
We have Jonathan Kohn of BitPetro. So welcome, Jonathan.
Thank you for having me.
So I think just to get started, why don't we, for some of our audience, they might not even be totally comfortable about what Bitcoin is. So before we talk about Bitcoin mining, do you want to explain Bitcoin?
Yeah, sure. Bitcoin is a decentralized network. It utilizes peer-to-peer technology to basically leverage the internet and nodes on the internet to share a ledger. And this ledger gets approved by everybody that participates in that network. And by using decentralized technologies and cryptographic keys, you're able to create a money that functions on the internet, so internet money. And that's a pretty novel invention because it's very easy to copy paste anything on the internet, right? So how do you create a single thing that I can give to you improvably, only one thing onto you? I can't double spend that one thing. So in essence, the problem that Bitcoin solves is the problem of the double spend, and it brings for the first Bitcoin transaction would have been done around 2009. So the network has been operating since then without failure. There have been some bugs, but they have been fixed. And what's amazing is that nobody's in control. The creator is a pseudonymous figure that is no longer active on the internet. And as of recently, we've seen the massive financialization of this protocol that was just digital beanie babies that were being traded, and today is a financial asset that has an ETF on it.
That's an amazingly clear explanation, and it's just wonderful. But what makes Bitcoin need energy?
So Bitcoin functions with a proof of work algorithm. What does that mean? That means that the creator Satoshi Nakamoto decided to implement cryptography in a way where you would secure the network by using energy to validate transactions. And the miners, what they're doing is they are computing away. They're using their computing power to basically calculate millions of times per second this one formula, SHA-256, to solve the problem. When they solve the problem, they win the right, or the lottery, if you will, for mining the next block. That means that they get to write the set of transactions that they grab from Bitcoin's memory pool. When you want to make a Bitcoin transaction, you broadcast that transaction into the memory pool. The memory pool then is there for any miner to see. And then if they win, they get to build the list of transactions that goes into the famous block of blockchains. So all a block is just a list of transactions that a Bitcoin miner gets to put into the algorithm, and then they lock it up with encryption. At the beginning and at the end of every block is basically an encryption lock, right? So that the next block requires the last block, and it's always validated and built on top of the last block. And so if anybody were to try to hack Bitcoin to say, for example, change a transaction in the ledger, they would have to work backwards in time. So not only would they need the computational power of Bitcoin today, but they would need multiples of that to gain an advantage on the network into the future and then change the history in the past. Very inefficient, almost impossible, almost requiring like state level involvement at the amount of resources it would take to deploy that attack.
Oh, wow. But in the meantime, even generating all the Bitcoin itself takes a massive amount of server energy, right?
Terawatts. That's right. That's roughly on the order of a country, right? Like if you totalize the network consumption. Now it's still nothing in relationship to normal energy consumption by Christmas lights, for example. Christmas lights consume a lot more power than Bitcoin. Televisions, video games. I mean, the list goes on. It's just that this is a very high profile, misunderstood use of energy. And because of that, you basically only have the ability to use, in the minds of people, this energy for this digital beanie baby. They don't realize that this is a much more, this opens up freedoms for the world. It opens up opportunities for businesses to reduce their overhead and increase their ability to know that funds made it across a transaction with certainty, not only with certainty, but at a cost basis that is unheard of. You can transfer billions of dollars worth of value in 30 minutes with complete certainty and security for $30.
Wow. Well, it's really interesting. And so basically what you've gotten into is you have servers that are used to create the Bitcoins, right?
Mm-hmm.
Yeah.
Absolutely.
And so what's interesting is that you might go through like what the relationship is with natural gas and how you're using natural gas wells that were stranded. The natural gas is stranded, couldn't get into a pipeline. They were burning it, flaring it. Instead of using it for that, you're using that to generate enough electricity to power these servers that are then basically creating money, minting money.
Mm-hmm. Yeah. So the network, as part, like I said, you're joining a network that has a set of rules. One of those rules is there is a reward for your proof of work. So when you give work to the network, the deployment of Bitcoin's power is now kind of distributed into pools, so that it's not like a single person that gets the reward and that's it. Now it's more probabilistic. It splits amongst everybody's users. So basically, whatever amount of horsepower you put in, you get a pro rata share of the rewards for that horsepower back. It's not that you're waiting and potentially losing out on your mining reward. And so that makes it to where Bitcoin miners can turn on and off at will. So they have an ability to turn off, turn back on, and not lose any money or any compute or anything like that. That makes them very attractive for places where there's intermittent power. So renewables are going to be a big place where they're going to be used. So like next to hydro dams and next to wind turbines, because there's excess power. In the oil field, it's not necessarily that the power is stranded because there's too much of it. It's more that the power is stranded because, like you were saying, there's no market. The market is either not paying what the asset is worth, or it's cheaper, better, for whatever reason. 80% of the oil companies revenue comes from gas.
I think we're losing your audio a little bit. It's breaking up just a bit.
What are you guys happy?
There you go.
Yeah,
It was just cutting out a bit.
Okay. So at the end of the day, if 80% of your profits are liquids, you're not really going to focus on gas. And so the history of oil and gas has been that most oil companies are not focused on their gas assets. And so we see a lot of flaring. And so companies like Crusoe and Giga have come out with solutions for mitigating those emissions by, instead of flaring that gas, putting it through a generator, putting it into a data center that is a standardized server room inside of a container, and mining Bitcoin. Now, when you mine Bitcoin, you are able to take those Bitcoin that you mine as a service to the network, right? For mining, for validating transactions, you get paid in Bitcoin. You can take those Bitcoin and send them to an exchange, and in return get paid on the average $10 an MCF at today's Bitcoin prices. Pretty nice compared to less than $1 an MCF coming from the pipeline, right?
Oh, yeah. And not to mention, it could be less given all the charges. Go ahead, Rick.
No, I was just curious about one thing as we're talking. Why is there such an amount of stealing catalytic converters, and then they're blaming it on Bitcoin, of course? But how do they use that to data mine?
Catalytic converters?
Yeah. That's the latest thing that's been going on in California. They're doing it up here. They're doing it in other states. And they said they're taking the metal of the catalytic converter. I'm not sure which one it was. And they're using it to mine or to create fuel for the mine. It's just interesting. There's been a lot of articles about that recently.
So there are renewable gas stories around Bitcoin mining, but I have not heard of that one.
Okay, interesting.
We heard from green gas sources like landfill and waste treatment plants, biogas like biodigesters.
Mm-hmm.
Certainly, those cases there's documentation of those, but not the one that you're mentioning.
Oh, that's interesting. Okay.
Yeah, what I think basically what Jonathan, you got started in the Fort Worth Basin, right?
Mm-hmm.
Yeah,
Yeah.
so like the Fort Worth Basin has a lot of gas wells that suddenly they produce oil too, and if they can't get into the pipeline, if they don't want to shut it in because then they lose the oil sales because it's produced at the same time. So then they would flare. Well, then you can go in, and if you can describe how it really works in detail, but my understanding is that you go in, get that stream of gas that's currently being burned, flared, put it into firing a generator through a turbine that basically, is it steam or anyway, you can describe that. And then from the electricity that's generated, you fire up the server that's in a container. But one thing I heard yesterday, somebody had tried putting in Bitcoin mining in Tulsa, and they said they had problems with interference, with electrical interference and the pad. How does that happen?
I mean, just like anything, the electricity is it has to be very well understood. It has to be very well engineered around. These are very large power loads. And so if you are, say, for example, plugging into the grid and you're not synced up properly to the grid, you're going to have issues. Similarly, if you're using multiple generators and you're not syncing their load correctly, you can create a lot of issues.
Oh, okay. That makes sense because they tried to do it with some low volume wells, and they just had technical challenges. I guess that's
That's not
probably
right. I mean, anything low volume is going to be more challenging because, as you know, most geologists know, wells it's not a spigot. You don't just turn it on and gas comes out. These are alive. They breathe. They burp. They turn into water. They turn into oil. They decide to turn back into gas. I mean, you name it. We think we know what's down there, and then we find out what's down there, right? My favorite saying is, "The drill bit will prove you a liar." So, if that's true, then production will also prove you a liar, because a lot of times these wells change their production characteristics through time. And so what a generator wants is a nice steady flow of gas, right? Like, it doesn't want liquids in the stream. It doesn't want other hydrocarbons in the stream. It wants nice steady, methane, or some kind of VOC that's in the right octane level for that motor. And so you have internal combustion engines, right? Your straight up natural gas Waukesha Caterpillar motor that you see, all the way up to your solar turbines, a lot of the stuff that you see in e-fracs. Have you guys, if you're familiar with e-fracs and the turbine generators that they roll up to provide electricity for the compressors to go and frack the frack the shale with all that sand and all that pressure, all that water. So they're getting away from using traditional generators because turbines are better, right? And you need a lot of power and a lot of compression. So those same big power applications that are now being used in fracking will eventually make it down their way into Bitcoin mining. It's just that right now, Bitcoin miners predominantly do not operate in oil and gas. They do not understand oil and gas operations. And it is an operational risk to raise your hand and say, I know what to do with a Waukesha.
That makes sense. And I know that in producing blended things with oil and gas, you have to have a separator. And sometimes I guess you'd have to invest in a bit more equipment on the site to have a compressor, et cetera, just to make sure it's as steady as possible.
Yeah, I look, there is the I want to sell gas to the market component of this, and then there's the reality of what is it that you have to plumb in to make it work. And so I know that a lot of the people that are listening to this and saying, how do I get a piece of $10 to $15 an MCF, are thinking I can get these Bitcoin miners to come in and pay me all this money for my gas. And that's just not how it's going to work. They're not going to take the risk of buying the computers and buying all the equipment and buying the generators without you taking some of that risk on yourself, right? And so the moral of the story is that you have to, for the Bitcoin miner, you have to provide the expertise of how to get that gas to the custody transfer point, which in this conversation is the generator. And then are you going to manage that generator? Because they don't know anything about that generator. If not, then you need a third party that is the power generation vertical. And you have a power generation vertical, a Bitcoin mining vertical, and an operations oil and gas vertical, whether that be midstream or upstream. I happen to think that midstream is probably the better fit here, product market fit wise. It requires a lot more power, but that's honestly who already has the problem of, variable streams of gas not making it to the market when they can, and then really being punished by the market under low price regimes.
That's an interesting point. So a pipeline company is having trouble with like you said, just with volumes, et cetera, and the unpredictability of the quantity. They would really be benefited. And a lot of midstream, like little pipeline companies, aren't making a lot of money right now.
So think about this. Oil doesn't come by itself, right? On the pipeline, you might have, in the solution, there might be gas, right? Often there is gas in the solution. And the reason that you have a blowout preventer valve in a tank battery is that gas likes to come out of that solution and it likes to build up. And if you don't have a blowout valve there, kablooey. Well, the same problem is apparent in a gathering system and a transmission system, just at a much bigger scale at the CDPs. So if you drive down from Fort Worth down to the Gulf Coast, say like to Padre or something, right about the time that you hit Victoria, you start noticing these flares that are not near wellheads, that are 2 million a day flares. So you're like, what's going on?
Yeah,
well, that's the pipeline company coming into a central delivery point that they've basically maxed out their pressures, and they're having to bleed off gas to allow more liquids to go down the pipe. again, all of these things are things that, like, you know, my company focuses on leveraging GIS. One of the things that led me to finding that quickly and validating that was really that what was going on was looking at that case and then laying all the pipelines and seeing them in thickness, and then seeing all the little ones kind of come into the big thick ones, and that's where the big flare was. And that was like, okay, that's what's happening, is they have nowhere to put this gas. So, looking at all those places, the back of a processing plant is going to be the ideal place for these things. Where do you put processing plant, in the midstream stack or in the downstream stack? I put it in the midstream stack in my mind. That's a midstream component. And if you think about it, the back of a natural gas processing plant is dry gas. That's your residue. Well, that's the ideal gas for a generator, because it's nice, dry, it doesn't have anything in it. Everything has been taken out that's going to be taken out. So at the larger volumes, I think that's where we're heading. I think that Bitcoin companies more and more are going to be looking at acquiring and diversifying into energy companies. And similarly, energy companies are looking into diversifying their revenue streams and saying, maybe we need to add a Bitcoin component to our infrastructure as a way of mitigating the regulation that's going to be coming, but B, mitigating this market that's punishing us. I believe I heard that people are getting paid negative rates right now in the Permian, especially in New Mexico. So negative or anything. What do you want?
Now, we're almost out of time, but what do you think will protect, or what is it to protect crypto and Bitcoin and everything from government intervention? As there's so much blabbing from politicians about we need to control it or take it over or get rid of it. A lot of them, the Europeans want it gone. What do you think will happen in the near future with Bitcoin and all the other players?
I think Bitcoin stands alone in that. Bitcoin is money for the rest of the world. And if you define money as a medium of exchange that can act as a store of value and that is got global liquidity, then, and I don't mean like global liquidity like, oh, sure, I can trade it in another country on an exchange. I mean, like, I can give it to another human and they will take it like value on the street. I think Bitcoin has achieved that. And since it is money that is not controlled by any government and it's not censorable, so and you can self-custody, you can keep it in your own control. I think number one, countries in and of themselves are going to be the primary parties that are going to be vested in Bitcoin, because China is not going to trust Russia for large settlements if they can trust Bitcoin to do that for both parties. Anytime you have a trusted third party or a non-trustable third party, because you don't need to trust it because it's straight math, then that gives you a certain level of security when doing very, very large transactions. And like I said, when you can move $30 billion for $30, it's hard to argue with that, rather than sending a boat full of metal down to not get possibly hijacked by, pirates.
Sure. That's fascinating. Well, we are technically out of time. Susan, any last questions, comments?
I just think it's so fascinating. And I'm thinking about what you said about the lower end. Like, all you need is 25 MCF a day that's consistent to have a profitable Bitcoin mine. To just put in that generator, put in the server, put in the insulated box, and it just works for you, making money.
Absolutely. And not only that, but I believe there's going to be protocols here soon where we'll be able to say there's emission mitigation there as well.
Yes. Oh my gosh. Yes. Yes, absolutely. I mean, it's measurable. So at any rate, it's something that somebody can document and put in as a positive statement in their financials or whatever.
It's true.
Absolutely.
Well, Jonathan, appreciate you coming on and sharing. I was very quiet on the show because I was learning. I'm not that much into knowing about Bitcoin, especially how it's processed, manufactured, if you will, and how it all works. I was going, this is interesting. So, no, definitely appreciate you coming on and sharing with us. Susan, anything else?
Well, thank you. I just really appreciate the opportunity to ask questions and to learn.
Of course, no, I really appreciate you guys giving me the platform and the time. And, I'd like to leave your listeners with just general words of wisdom about Bitcoin. $5 a day. That's all you need to do to start, to learn, to just open yourself to the fact that people from Argentina, people from Venezuela, we always understood the value of the dollar versus our currencies because you could not trust our government with our currencies. And so in a similar fashion, I would tell you to talk to people that have lived through the experience of hyperinflation and that have lived through the experience of not being able to trust your money. And then realize that this is a way of peacefully removing yourself from that system and voting with your feet by leaving the system little by little. And what you're doing is you're giving yourself the sovereignty of holding your money, which gives you the responsibility of knowing how to not lose it, right? Like that's important. You need to learn how to maintain it safe. But at the same time, if you can manage to buy $5 a day while we're in this part of the S curve, we haven't hit this part of the S curve yet. And we will eventually hit this part of the S curve and Bitcoin will be boring. But if I'm right, and governments are the ones that are the ultimate users of this IP address system for money, then buying $5 a day essentially means that each Bitcoin will give you something like 1,000 X return because the math puts it to where there's only 21 million Bitcoin ever. About 5 million have been lost, okay? There are more than 15 million millionaires in the world, and if all of them tomorrow decide they want one Bitcoin, the law of supply and demand kick in, and we have Bitcoin goes infinite. That used to be the moral that we gave everybody before BlackRock and all of these ETFs start buying 9,000 Bitcoin per day when the Bitcoin emissions from the network itself is only 900 per day. So we're starting to see the takeoff happen. I will tell you $5 a day is how you get started. Don't be scared of putting in, especially if you're going to put it into a tax savings account, like a Roth account, max it out on that. And if I'm right, we're talking something in the neighborhood of $5 to $50 million per Bitcoin when governments adopt it.
Wow. I'm going to have to mull that over. That's really interesting.
Well, look, Bitcoin doesn't know anything about this. Bitcoin is just a system that works on its own rules. It doesn't care about the human world. The human world is changing in a way where Bitcoin is a valuable asset to humans. And that's the thing that's changing. It's that the world is very quickly adopting things like AI. We're losing trust in central authorities. And so that dynamic is making itself to where we need a trustless system for value transfer.
Makes sense. Makes sense. Really, well, again, Jonathan, really, thanks a lot. Appreciate that. I'm going to get my $25 for this week soon. So that's good advice, actually. Very good advice. So appreciate you coming on. Susan, we'll see you next week. And if anybody wants to get a hold of Jonathan, we've got his information below in the notes, so you can take a look at his website and reach out. Have a good one, everyone. We'll see you next time on eBizChat. Thanks. Bye-bye.
Bye.